It's Money Monday, and investing in the stock market, it's one of the best ways to grow your money, but getting started, we all know this, it could be so overwhelming.
Absolutely, taking that first step forward. So today we are breaking down the basics that anyone can do from home with the help of Teri Ijeoma, creator of the online trading course, the Trade and Travel Program. Thank you so much, Teri, for being here.
Thanks for having me.
Absolutely. So what originally drew you to trading? But before you get to that, really break down this misconception that a lot of people have that you need a lot of money in order to start trading. That's not true.
Definitely. Well, so I was actually an assistant principal of an elementary school, and then I started trading full time. I just wanted something that would allow me the freedom to travel, and I wanted to own my who, what, when, and where. Who I worked for, what I worked on, when I worked on it, and where I worked from. But the cool
That's a great mentality. I love that.
Cool?
Yeah.
But the cool thing, Steph, to your point, it's really easy to trade right now. Many brokers are not charging any fees, and then you can open an account with no money down. And so the biggest thing you're thinking about is just how much is the actual stock. It's from $50 for an airline stock to $150 with Apple. These are some of the lowest fees or prices I've seen in my 12 years of trading.
Wow. And what about long-term? We were talking about this earlier, the idea of long-term trading. And I remember I was 17 years old. I was telling you, Teri, I was 17 years old, and I was investing in my 401k when I was making $150 a week. I was just like, whatever penny I can put in there, I'm just going to do it.
Smart.
That's so important to do and instill that young, right?
Yeah. So, Gio, you were telling me as a longer-term investor, you've been investing in mutual funds. Well, you can actually trade the indexes too. So you can trade things called ETFs that actually follow the overall market, like the Dow, S&P, and the NASDAQ 500. And then you also, as a long-term mentality, you can think about stocks that you wouldn't mind holding for the long term, but you're just going to trade in and out of them for income. So when the stock comes down, you're getting into some, and as it goes up, then you'll take some profit. Anything less than a year is still considered a trade, but it just allows you to be able to achieve your goals versus waiting all the way till retirement.
And earlier you mentioned an online broker. For folks that have never traded, aren't really familiar with this world, what is the first step to getting an online broker?
Yes, for trading, the first step is you have to open a brokerage account. Bank of America and Chase have both started allowing you to open up accounts. So you can actually walk into the bank and say, hey guys, I want to trade, help me out. Or if you're Googling, you can look up online brokers, so like E-Trade, TD Ameritrade, Interactive Brokers. But here's some tips for what you're looking for. You want companies that have good customer service, you want them to have good investing tools, education, and then be reliable.
Right.
Yeah.
And how do you know which stocks to choose?
And that's the question, right? Because I think we're all looking at this and we're like, what do I do?
So here's my thing. I've been trading about the same 30 companies for a long time. It's a myth that you have to trade a ton of companies. You can trade 2 or 3 companies and really do well. I have some students that trade 1 company and meet their goals successfully. But these are the things you're looking for. You're looking for companies they're healthy. During their earnings report, they reported good earnings. You're looking for companies that moved $1 a day because you want to make some profits, right? And then you're looking for companies that are best in their sector. I like getting the best company, and that's the one I'll trade.
Now, what about the risk? Some folks may be a little hesitant to dive in. Should they come up with a risk management plan? And if so, how do you do that?
Protecting your risk is super important. I look at stock charts, which is just looking at past price movement in order to figure out where the price is going. It's not 100%, but you can actually look at where the price is going down and then compare that to your reward, so your risk versus your reward. Also, think about your risk tolerance in advance. So if you're thinking, okay, I'm only wanting to risk $300, when the stock goes down, you can get out of the trade or you'll know your quantity size.
And you were telling us about the high yield savings account, to consider that. What's that all about?
So back in the day, like a couple years ago, interest rates were really low. So many people weren't going towards savings accounts. But now that the Fed is raising interest rates, if you are totally risk averse, you can still invest by just putting your money in a high yield savings account.
Oh, well, Teri, thank you so much for joining us. Thanks for bringing your joy and helping us figure out how to make more money.
I'm going to get your number after this, okay?
I would love to teach you. I love it.
Great tips. Thank you.
Well, hey there, GMA fans. Robin Roberts here. Thanks for checking out our YouTube channel. Lots of great stuff here. So go on, click the subscribe button right over here to get more of awesome videos and content from GMA every day, anytime. We thank you for watching, and we'll see you in the morning on GMA.